October, November 2021, paper 11. Let's start. Start with the first one. A trader is keeping full sets of accounts. He is keeping full records. So which statement is correct? Credit note issued is recorded in the sales journal. Now, before I go over there, let's just for Zara. Invoice issued is for what? Dua, can you say?
Yes, it's sales.
Invoice issued is for credit sales. Invoice received is for what?
Credit purchases.
It is for credit purchases. Then credit note issued is for what? Credit note issued is for what? Anybody knows? So credit note issued is for sales return. Credit note received is for purchase return. Okay. I'm repeating again. I'm just showing you this part so it will be a little bit clear. Business documents. Yeah, there. Okay, no problem. We have 7 books of prime entry. We have 7 books of prime entry. The first book of prime entry would be sales journal, sales journal, sales return journal, purchase journal, purchase return journal, cash book, petty cash book, and general journal. There are 7 books of prime entry: sales journal, sales return journal, purchase book, purchase return book or journal, cash book, petty cash book, and general journal. Sales journal, what do we record? In the sales journal, we record credit sales. Which document we see and we record credit sales? Which document will we see and we will record the credit sales? We will see invoice issued. Invoice issued. So we will see invoice issued and record credit sales. If it is invoice received, then if
Credit
it is
purchases.
invoice received, then the document is invoice received. Then it is credit purchases. So what do we record in the purchase journal? What do we
Credit
record in the purchase journal?
Credit purchases.
Credit purchases. And which document we see and we record the credit purchases?
Invoice received.
Invoice received. Which document do we see and we record the credit sales?
Invoice
issued.
Invoice issued. Which document do we see and we record credit purchases?
invoice received.
Where do we record credit purchases?
In purchase journal.
Okay. So just have a look at this. What is an invoice? When a business will sell goods on credit, it will issue an invoice. So who issues the invoice, Aman? Aman, who will issue invoice?
The business.
Seller or the buyer?
Seller.
Okay. The supplier. Supplier will issue the invoice and who will receive the invoice?
Customer.
The
Buyer.
buyer or the customer will receive invoice. Supplier will pass the entry for. He's issuing the invoice. Invoice issued. So supplier will pass the entry for.
Sales.
Receive.
Okay. Buyer will pass the entry for. Credit
Purchases.
purchases. So see, when the business is selling goods on credit, it will issue an invoice. Invoice issued will be a source document to record credit sales. Are you all with me? Okay.
Yes.
Okay, if the business issues invoice, it will pass entry in which book?
Sales journal.
Sales journal or sales table. The next part, see, when a business purchases goods on credit, it will issue invoice or it will receive an invoice?
Receive.
Receive.
To your video, it will receive an invoice. Invoice received is the source document to record.
Purchases. Credit purchases.
Credit purchases. If I receive invoice, I will pass the entry in which book?
Purchases.
Purchase
Journal.
table. Similarly, credit note. Credit note issued means sales return. I'm repeating. Credit note issued means sales return. And credit note received means what? Purchase return. Sales return in sales return journal. Purchase return in purchase return journal. Okay. Now what is debit note? When the buyer is buying anything, okay, and he wants to return the goods. So he can directly go to the seller and return the goods. Or first he will have to request.
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 Atyat, stop smiling. So when you request the seller that please take back my goods, you will issue a debit note. Based on the debit note, there is no entry that is passed. So the crux is in business documents, you just need to remember this. Invoice issued, what? Credit sales. Invoice received,
Credit purchases.
credit purchases. Credit note issued,
Sales return.
sales return. Credit note received,
Purchase return.
purchase return. Debit note, no entry. Cash entries would go in the cash book. Everything else would go in the which book? Everything else
General
would go in the
journal.
general journal. What is this everything else? Can you give me examples of everything else?
Bad debt.
Bad debts, what else?
Depreciation.
Depreciation, what else? Buying of non-current assets on credit. Provision for bad and doubtful debts. So all this comes in general journal. I hope this is clear now. So come on. Credit note issued. Where is it recorded?
Sales return.
Credit note issued. Where is it recorded? In sales return journal. Sales invoices. Where are it recorded? Where is it recorded?
Sales journal.
In sales journal. So this is wrong, this is wrong. Sales account is kept in which ledger? It is kept in general ledger. I will just teach you division of ledger also right now. This statement is correct. Sales journal is prepared from sales ledger. See, first a journal is prepared, then the ledger is prepared. Okay, journal is prepared from business documents. What is journal prepared from? Business documents. So I will give you the accounting process also right now, and I will teach you division of ledger also right now. So even that is done. If you want to see a detailed video of division of ledgers and business documents, you can go to my YouTube and see. It has a detailed video. Now I will teach you all division of ledger. Can you see division of ledger here? Yeah. Come on. First thing before division of ledger, I will teach you the accounting process. The first thing that happens in accounting is, do you know, Dua?
No,
First, the transaction takes place. When the transaction takes place, there is a business document that comes into picture. What are the business documents that comes into picture? Eman, do you know the business documents?
I forgot.
I just taught you right now.
The business documents.
Invoice.
Which are those? Invoice and credit
Invoice,
note.
credit note, debit note, vouchers,
You write bank transfers.
pay slip. Okay. So first the transaction takes place. Then what do you have? Business documents. The business documents are issued. From the business documents, entries are passed where?
journal.
From the business documents, entries are first time passed in books of prime entry. What are the books of prime entry?
Sales journal, sales return journal,
Yeah.
purchases, purchase returns, and petty cash book, and general journal.
Okay, very good. So, what happens in the accounting process? Come on, tell me again what happens in the accounting process. First, the transaction takes place. Yes. Then,
Transactions and then the business document.
then we pass entries for the first time in the books of prime entry. There are 7 books of prime entry. Can you name them?
Sales journal, sales return journal, purchase journal, purchase return journal, cash book, petty cash book, and general journal.
Cash book, petty cash book, and general journal. Eman, can you tell me what is recorded in sales journal?
All the sales.
Which sales?
All the sales which happened on
Correct.
credit.
In sales return journal?
All the returns.
Purchase journal?
Credit purchase.
Purchase return journal?
The returns.
Okay, in cash book, cash transactions, petty cash book, small cash transactions. Okay, and in general journal, what comes in general journal? Everything else. Are you with me?
Yeah.
Are you with me? Are you all with me?
Yes, yes.
Okay. From the journal, we prepare ledger. From the journal, we prepare ledger, and in the ledger, we maintain all accounts. From the journal, we prepare ledger, and in the ledger, we maintain all accounts. So there are 4 types of ledger that we make. Do you all know the 4 types of ledger? There is a sales
Purchase.
ledger. There is a purchase ledger. There is a nominal or general ledger. And there is a cash book. Cash book is both a journal as well as a ledger. Okay. Do you know what do you keep in your sales ledger? In the sales ledger, you keep the personal account of all your customers. That means if A is your customer, you keep personal account of what? All your customers. That means if A is your customer, you will make A's account in the sales ledger. If B is your customer, you will make B's account in the sales ledger. So all the customers' account is kept in the sales ledger. Personal account of credit customers. What is kept in sales ledger? Personal account
of customers.
credit customers. This resembles which account? This resembles the SLCA. SLCA's balance begins on credit sales, dishonor, interest, refund, everything else here. Can you tell me in the purchase ledger what will be kept?
Supplier account.
All the personal account of your suppliers. Suppose if Dua is your supplier, so I will keep Dua's account. If Atyat is a supplier, so I will keep whose account? Atyat's account. This resembles what? A PLCA. In general ledger, we will keep all other accounts except cash or bank. In general ledger, we keep all other accounts except cash and bank. All other accounts means what? Sales account, purchase account, bad debts account, depreciation account, disposal account. Everything else we keep in the general ledger or the nominal ledger. And in cash book, we keep the cash account and bank account. There is not even discount allowed account is kept over here. Even discount received account is kept over here. Come on. Drawings account will come in which ledger? Do a video. Drawings account will come in which ledger?
Nominal.
Nominal. Eman sales account will come in which ledger?
Sales journal.
I'm asking ledger.
Sales ledger.
It won't come in sales ledger. You again started your nonsense, na? Which ledger? Sales account, which ledger?
Nominal.
Atyat, Zara, Dua, video. Customers account, which ledger? Come on, anybody
Sales.
answer? Customers
Sales,
account, which
sales
ledger?
ledger.
Suppliers,
Purchase ledger.
purchase ledger. Provision for depreciation of van, which ledger?
General ledger.
Nominal ledger. So you have only 4 ledgers. What are the 4 ledgers? Sales ledger, purchase ledger, nominal ledger, and cash book. In sales ledger, personal account of customers. In purchase ledger, personal account of suppliers. In nominal ledger, everything else. And cash book, which is both a journal as well as a ledger. You're going to have cash account and bank account. Am I clear? Am I
Yes, ma'am.
clear?
Yes, miss.
Yes.
Okay, fine. Let's go again to our MCQ. First MCQ had so much of explanation. Which statement is correct? Sales account is kept in which ledger?
General ledger.
Sales account is kept in general ledger. So this statement is correct. Are you all with me? Are you all with me?
Yes.
Yes, miss.
Okay, fine. Come on, read the second entry and tell the correct one. Totals of discount column in a 3-column cash book. So you have a 3-column cash book. 3-column cash book means the amount columns are 3. Okay, 1 column is for cash, 1 column is for bank, and on the debit side you have discount allowed. I'm telling this specially for Zara. On the credit side, you have discount received, 1 column for cash and 1 column for bank. Okay. Total of the discount columns in a 3-column cash book, the debit side total was how much? 320. And the credit side total was 140. What entries are made when these totals are posted to the nominal ledger? Now listen to me. Only 2 things will go to the nominal ledger from here. 1 and 2. Cash book is a journal as well as a ledger. In the sales ledger, which accounts do we make?
Customer's account.
Customer's account. In purchase ledger, which account do we make?
Supplier's
Supplier
account.
account.
Supplier's account. In nominal ledger, everything else. That means discount allowed would be in nominal ledger. Do you all agree to it?
Yes.
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 Discount received would be in nominal ledger. Do you agree to it? Do you
Yes.
agree to it?
Yes, sir.
Okay. Discount allowed will be on what side? Debit side. So the total of discount allowed goes to the debit side of the discount allowed account in the nominal ledger. And what do you write? Total for the month. Eman, can you tell me where will this go?
Which one?
This.
Discount received will go on the credit side of the nominal.
Of the discount received account.
Column.
In
Yeah,
which ledger?
nominal ledger.
Nominal ledger. 140. What will you write? This is total for the month.
For the month.
Okay. So account debited. Discount allowed will be debited by how much?
320.
320. And discount received will be credited by how much?
140.
140. Very good. So what is the correct option?
B.
B. Okay, fine. Now go to the third one. Try to do it yourself and then I will help you. In the meanwhile, there's an answer.
Yes, I got lost 385.
Okay.
I got profit 85.
Yeah. Okay, come on. Company sold its delivery vehicle for 2,800 after 2 years of use. So costs minus provision for depreciation will give you net book value. Okay. Net book value is compared with the selling price to find out the profit or loss on sales. Zara video. So net book value is compared with the selling price to get the profit or loss on sales. Come on. Original cost of the vehicle is how much? 6,500. And company depreciates using reducing balance method. 2 years I have used the asset. Come on, year 1, year 2. Cost is 6,500. Depreciation would be how much? First year depreciation how much, Dua?
1950.
30%. It is 1950. What is the net book value?
4550.
Second year. The net book value will be 4550. Depreciation, reducing balance method.
1365.
1365. So net book value is 3185. Net book value is 3185. I just want this. This I will compare with the selling price. So the book value was 3185 and I sold it for 2,800. So I got a loss of 385. I hope you all are with me.
Yes, miss.
Try the fourth one. Come on. A trader depreciates its loose tools using revaluation method. Which account is credited at the end of the year to record depreciation on loose tools? Okay. Do you know the entry for passing depreciation? Do you all know the entry for passing depreciation?
Miss, depreciation is credit.
Income statement debit. Provision for depreciation credit. What is the entry for passing depreciation?
Income statement debit and provision for depreciation credit.
So which account is credited?
Depreciation.
Provision for depreciation of loose tool accounts is credited. Aman, what is the journal entry to pass depreciation? Aman,
Yeah.
what is the journal entry to pass depreciation?
Income statement to be debited, credited.
What credited?
Provision for depreciation credit.
And
Depreciation debit.
I just now gave an entry. What are you sleeping, Aman?
No.
What is the journal entry to pass depreciation?
Income
What is the
statement
journal
debit
entry to pass
depreciation.
depreciation? What is the journal entry to pass depreciation? Give me the answer.
Miss, it's C.
It's
C.
How?
The purchase price is 50,000 and depreciation is 20,000. So the net book value would be 30,000. Then the sales price
Cost
is
is
60,000.
50,000 and depreciation to date is 20,000. So the net book value is how much you said?
30,000.
30,000. It is sold for how much?
60,000.
Okay, so
There is an increase of 30,000.
there's an increase of 30,000 on the asset side. So non-current assets is going down by 30,000. However, the current assets is increasing by 60,000 because you are receiving this cash. So the net assets in the year of sale is increasing by 30,000. I hope this is clear. Try next one. Eman, answer.
Yeah.
Anybody can answer.
Yes, it's D.
Sorry.
D, 2 and 3.
Contra will come over here, bad debts will come over here, refund will come over here. Okay, so it's 2 and 3. It is D.
2 and 3.
Eman, you did not answer again.
Arey, wait, give me some time
Question
to
number
answer.
7. Try it yourself, come on.
Will it be A?
Now tell me why you choose debit. The balance in the suspense account is 200. That is for sure. But why did we choose debit? See, what happened is you forgot to record discount allowed. So now you're recording discount allowed which has a debit balance. You sold a vehicle, you passed entry in the bank and you forgot to record it in the disposal account. So now you're putting disposal credit. So if you see which side total is more, debit total is
Debit.
700 And credit total is how much? 500. So, which side total is more? Debit total. So, the account will have a debit balance of 200. Okay, but will be written on the credit side. Closing balances are always written on the opposite side. It will have the balance of the heavier side. So the heavier side is the debit side. So account will have a debit balance, but it is written on the credit side. I hope this is clear.
Yes.
Okay. Come on, go to the next one. Go to the next one. Try it. Come on, tell me what is it telling? See, a business had removed money from the bank for petty cash. Are you all with me?
Yes.
The business had removed money from the bank for petty cash. So the correct entry would be cash is coming in, so cash debit and bank credit. Yeah?
Yes.
Are you with me? Are you all with me?
Yes.
Yes. Yes, sir.
But what did he do? He passed a reverse entry. He passed an entry as bank debit, petty cash credit. Now, if I reverse this entry, it would be bank credit, petty cash debit. So the rectification entry would be this. Rectification entry is what? Cash debit 400. That means he has to add to his cash 400 and bank credit 400. That means he has to remove from bank account 400 so that the account is correct, so that the account is equal. Now, what are they telling? That even though he made this error, even though he did not add to cash 400 and he removed from bank 400, the cash book balance is equal to the balance as per bank. Okay, what is he saying?
But the money is going out now from the cash book.
Money is going out from the cash book. Yeah, so correct entry. Money is going from the bank
Yeah.
and it is coming in cash.
And then we wrote the opposite thing.
We wrote the opposite. Then this would be the rectification entry. So cash debit 400 and bank credit 400. That means he has to add to the cash balance and he has to remove from the bank 400. But what
Yeah.
are they saying that in spite of this, in spite of doing this nonsense and not passing a rectification entry, his cash balance and bank balance remains the same. That is what they're saying. That despite of this, the cash balance and bank balance is the same. That means something has happened. Something has happened which should reduce your bank balance. Something has happened which should reduce the bank balance, but it did not reduce your bank balance. Something like this might have happened. Something might have reduced your bank balance and increased your cash balance, but it did not reduce or increase the cash balance. What could it be? What is an uncredited deposit? Uncredited deposit is you have already increased the cash book balance, but the bank balance remains lower. But the bank balance has not yet increased.
Could you repeat that?
What is uncredited deposits? Uncredited deposits is something that you have deposited the money, you have recorded it in the cash book, but it has not happened in the bank. So cash book, you have increased the balance, but in the bank, the balance is remaining lower. So there was an uncredited deposit of 200. Now we don't want any 200 because the error is of 200. Now you have to tell me whether there was an uncredited deposit or an unpresented check. What is an uncredited deposit?
When the money has been deposited but has not happened in the bank.
Okay. You have increased your cash book balance, but bank has no entry for it. But bank has no entry for it. And what is unpresented checks? Bank has no entry and bank balance is lower. What is unpresented check? You have removed from cash. You have removed from the cash book. But bank has no effect because somebody did not go to present the check. So bank balance is higher. Come on, tell me. In order to correct the error, In order to correct the error, what you have to do? You have to add to cash and reduce the bank. Yes?
Yes, yes.
This you will do to correct the error. But if you are not correcting the error and still the bank balance is same, means the bank is high and cash is lower. This you do to correct the error. But the bank is higher and cash is lower. In which case the bank is higher and cash is lower?
Presented check.
Unpresented check. Okay. So before the correction, the bank should be higher and cash should be lower. So this is possible because there was an unpresented check, because of which your cash book balance was low because you already removed it from your cash book. But the bank book balance was high. I'm giving you some time to reflect on it.
When the money has book, but the bank has no effect, so the bank has a higher value.
Okay, unpresented check is, again tell me what is an unpresented check?
The money is removed from the cash book, but bank has no.
Unpresented check. That means your cash book balance is lower,
Yeah.
but the bank statement balance is higher. Why is the bank statement balance higher?
Because the money is still not showing that
Because
it's.
the person to whom you gave the check has not yet presented.
Yeah.
Okay? Because the person did not present the check. What do you mean by uncredited deposits?
Cash book is higher, bank balance is low.
Cash book is higher and bank statement is lower. Why is bank statement lower? Because bank has not yet received this money. Bank has not yet received this money because it takes some time to process the amount in the bank, right? Yes?
Yeah.
Now, what was our rectification entry? What was our rectification entry? In order to correct the error, what was the rectification entry?
Cash,
Hmm.
petty cash, debit 400, and then bank is credit 400.
But even before passing this entry, the cash book balance is equal to the bank statement balance. That means the bank is higher by 400. To rectify, we had to remove from the bank and add to the cash. Yeah. So before
Yeah.
rectification, the bank is higher by 400 and cash is lower
Lower.
by 400. That is why in the rectification, we will add to the cash and remove from the bank. Yes?
Yeah.
Okay. So in which situation bank is higher and the cash is lower?
Unpresented check.
Unpresented check. So what would be the correct answer? There is an
Unpresented check.
unpresented check. Come on. Next one. Businesses calculated a draft profit for the year. Which of these needs to be adjusted to calculate the correct profit? Think. Bad debts needs to be adjusted to calculate the correct profit? Yes, because it reflects in the income statement. So option D is not there. Come on. Goods sold on sales or return basis have been included in the inventory. Whenever you sell goods on sales or return basis, you will never recognize this as income until it is approved. So you sold on sale on return basis and you treated it as your inventory. This is the actual correct treatment. So this is what is correct you have done. So there will be no effect of this transaction on your profits because you've done something correct. When will you have to correct the profit? When you've done something wrong. So this was not wrong. Rent paid in advance has not been included. Is this right or wrong?
Wrong.
This is wrong. So this means you will have to take this transaction to have a correct profit. So 1 and 3 is there. Come on, this is gone. Now you have either option B or option C. Owner's cash drawings has been entered in the owner's capital account. This is wrong or correct?
Correct.
Correct. So what would be the answer?
B.
Option B. Come on. Find out the balance of capital account for me. All the debits minus all the credits would give you capital. What is capital?
119,000.
No. Profit and drawings is there. Capital plus profit minus drawings.
Is it A?
Yeah. How did you get it? Tell me. What is your total
did
assets?
all
162,000. So your total liabilities will also be 162,000. From that you subtract your non-current liability and current liabilities. 162,000 minus 25,000 minus 18,000. So your capital is 119,000. But the capital is made up of capital plus profit minus drawings is equal to 119,000. What is the profit? Plus 20,000 minus drawings is 15,000 is equal to 119,000. Capital plus 5,000 is equal to 119,000. So capital is 119 minus 5. So capital is 114,000. I hope this is clear. Am I?
So first you subtracted all the drawings with credit items, then you got capital, then you reduced drawings and added profit.
Yeah. Okay. So make a rough format and do it. Are you with me?
Yes.
Try the 11th one.
So when you subtracted the credit with the debit, the profits and drawings were included, no?
But you didn't get the correct answer.
Yeah.
Because I took this figure as cumulative. Na? Come on, do the next one. Capital account will have balance which side?
Credit.
Credit side. Additional capital will come which side?
Debit.
Credit side only. Drawings, debit. And inventory you will take at 24,000. Closing capital will also come on the debit side. What is the profit for the year? For this you should know the capital account format. I hope you all know the capital account format. Opening capital, closing capital, drawings, additional capital, interest on capital here, and interest on drawings here. Drawings, whenever owner takes in goods, it will always be recorded at cost price. So this will be 304,000 minus 183,000 minus 74,000. What is the profit?
47.
47,000. Always remember drawings of goods will be at cash cost price or the lower price. Okay? And whenever there is additional capital in kind, it will be at market value. Come on, do the next one. Why might a sole trader form a partnership? Why might a sole Rahman answer this? Why might a sole trader enter partnership? Partnership also has unlimited liability. Revaluation is never a reason to enter into partnership. Partnership also has unlimited liability, so there is no protection of limited liability. So why might a sole trader form a partnership? To gain additional capital for the business. Are you all with me?
Yes.
Come on to the next one. You have to make a partner's current account. Very easy. Just make a format of current account. I hope you all remember the current account. Start of the year same side, end of the year opposite side. So start of the year, X has a credit balance and Y also has a credit balance. End of the year, X has a credit balance. So credit balance debit side and debit balance credit side. I hope you know this. This is the only twist. Closing balances appear on the opposite sides. Opening balances appear on the same side. Zara?
Yeah, miss.
Okay. This is the only twist in the question. Though it is written debit, it will be written on the credit side. On the credit side, yeah. Drawings is 13,000 and 19,000. X has got a salary of 5,000. What was the profit for the year before appropriation? Oh my God. So profit before appropriation. There is no interest on drawings. There is no interest on capital. There is nothing, right? Come on, find the profit. This side you will get the profit. Okay. Are you all with me? From the profit before appropriation, you add interest on drawings, but interest on drawings is not there. You will minus the salary, interest on capital, those things. So there is salary for X 5,000. Okay. So you get the net divisible profit which you divide amongst the partners. So what is the profit that you have divided amongst the partners? It is 13,500 and 9,000. So the amount is 22,500. What is the profit before appropriation? They are asking. That means they are asking the profit before salary, before interest on drawings, interest on capital. So what is the profit before appropriation? The answer is C, but I am getting 27,500. What mistake did I do?
Notice the mark scheme says C itself, sorry, B.
Sorry?
The mark scheme says B, 27,500.
Okay, so it is B. We are getting B only, right?
Yeah.
Are you all with me? Aman, Atiyat? LM and N were partners sharing profits and losses equally. This is N's capital account. What explain entries in the capital account? N bought a motor vehicle from business paying 1,000 more than its book value. No, this is wrong, right? N's capital account includes his share of loss on disposal of motor vehicle. Does loss on disposal of motor vehicle comes in capital account?
No.
No. N increases capital by introducing a motor vehicle. See, motor vehicle is here. That means this is drawings. Even this is wrong. And retired and took the amount due to him in the form of motor vehicle and money from bank. This can be possible. N is retiring, therefore it has its capital account. We write his current account balance. We have to give him 15,000. We have to give him 15,000. We give him 7,000 and the balance bank. So the answer is D. Come on, try the 15th one.
Miss, could you excuse me for a minute?
Yeah, you are.
Thank you.
Come on, answer this question. Shareholder is selling ordinary shares. And he's selling the shares for more than he paid for them. So the ordinary shares would increase or decrease?
No effect.
Okay, company's financial position would have no effect because a shareholder is selling from outside. Whatever he's doing outside. Company will have no effect even in the capital account and even in the share premium account. So it is option D. Are you all with me?
Can you explain the share premium part?
See, in the company, the capital is made up of ordinary share capital, preference share capital, general reserves, revaluation reserve, share premium. Okay. Now there is a person outside who is a shareholder. He is selling the shares outside the market. For how much I am not concerned. Will there be any effect of this transaction on the company's statement of financial position?
No.
No. So there is no effect of this transaction which a person is doing outside on the company's statement of financial position. Are we clear? Come on. Let's do this one. What is the maximum total dividend that could be paid to a shareholder? What is the maximum total dividend that could be paid to the shareholder? What is revenue reserves and what is capital reserves from here? These both are revenue reserves. These both are capital reserves. Are you all with me?
Yes.
Capital reserves can be used only for fixed purposes. And dividend can be paid only out of dividend can be paid only out of
Revenue reserve.
revenue reserves. Okay. So what is the revenue reserves? 130,000. So what is the maximum total dividend that could be paid to the shareholders? Okay. B. Come on, let's do the next one. Value of inventory is overstated by 20,000. What is the effect of this error on retained earnings? If inventory is overstated, that means if the asset is overstated, then the capital of the current year would be overstated. Okay? If asset is overstated, capital of the current year would be overstated and there will be no effect in the next year.
What was the above wala answer?
कौन सा वाला?
Yep.
Dividend can be paid only out of revenue reserves. You have only two revenue reserves. General reserves and retained earnings.
Yeah.
Will be the dividend.
Okay.
Come on. If asset is overstated, then capital of the current year will be overstated. For the next year, there is no effect on anything. What will be the answer?
A.
A. Come on, 18th.
1 minute, miss. I'm seeing 17.
We want limitations of accounting ratios. What is the limitation of accounting ratios? See, different companies can use different accounting policies. If different accounting policies are used, then accounting ratios cannot be used.
Miss A.
No. If different accounting policies is used, you can never use accounting ratios. Okay, this is the only limitation. This is a disadvantage that, okay, it cannot compare efficiency, liquidity. Efficiencies of business can be compared. Efficiencies of business can be compared by using accounting ratios. Liquidity of the business can be assessed by using accounting
What's
ratios.
B?
So, the answer is
B.
that what you can't do, if different companies use different accounting policies, then you can't use accounting ratios. That is the limitation. Come on, 19th. Non-current asset turnover ratio. What is the formula for non-current asset turnover ratio?
Non-current assets over sales multiplied by 100.
What is the meaning of non-current asset turnover ratio?
What's the formula?
What is the meaning? How efficiently you use your non-current assets to
And what's
earn
the formula?
profits. What is the formula for non-current assets turnover ratio?
Non-current assets over revenue into 100.
Are you sure into 100? And is it non-current assets or net book value of assets?
Miss, maybe we don't multiply it into 100.
Okay.
Yes.
First, check the formula for non-current asset turnover ratio. What is the formula non-current asset turnover ratio? How efficiently a company is generating sales from its existing fixed assets. How efficiently a company is generating sales from its existing fixed assets. What is the formula, Dua?
Just 1 second.
Formula for non-current asset turnover ratio?
Is it revenue
Net
divided
sales
fixed assets?
Revenue divided by
Fixed assets.
revenue is 3,40,000 divided by what is the fixed assets? Fixed assets at net book value. Non-current asset turnover ratio is revenue upon fixed assets or non-current assets at net book value. Okay. What is the formula for non-current assets turnover ratio? Please.
revenue divided by fixed assets.
At the net book value. So what is your revenue? 3,40,000. Net book value of the assets 53,000. So your answer is 6.42 times. Your answer is 6.42 times. Go to the next one. Find the value of closing inventory for me. Now this you all can do it yourself. I'll go to the, tell me how.
First, we find the cost of goods sold. So we have gross margin. So we do 20% of that of the sales, and we get 80,000 as profit. Then sales minus the profit, we'll get cost of goods sold. So 400,000 minus 80,000 is 320,000. Then inventory turnover formula is cost of goods sold divided by average inventory. That's why it is 320,000 divided by 60,000 plus X. Okay.
320,000 divided by 60,000
plus X divided by 2 is equal to 4. Then we do 320,000 divided by 4.
Divided by 4.
Yeah. 80,000 multiplied by 2, 160,000.
So can I cut
Minus
these 2 ones and 2 twos? 60,000 plus X is equal to 320,000 divided by 2. So it is 160,000. X is equal to 160 minus 60. So X you get 100,000. That is the closing inventory. Yes.